Welcome to BitBoy Crypto. My name is AJ, and I'm sure you all know how much I love music. I'm listening to a very specific Green Day song today, and it's a red day on the charts. Already, I'm not surprised. Yes, historically, September is a bearish month. In fact, the past 6 Septembers in a row have been bearish, and the question is, will this September be the same? Regardless of the direction of the overall trend, I can't help but noticing that all of these Septembers act as the setup before the bigger move, and I think that is more important. In September of 2017, from the beginning to end, Bitcoin went down 7%. There is so much more that happens in the middle than taking start to finish at face value. Like the first half of the month, Bitcoin actually fell 42% down below 3,000. And then once it hit that bottom, that was the start of the reversal for a much bigger move. 94 days later, it pumped 587% to 9,600. 2018 was a similar story, but it was going the other direction. From start to finish, Bitcoin only fell 5%, but from the start of October to mid-December, Bitcoin fell over 50%. In 2019, the bulls got trapped because Bitcoin pumped 12% in the first 3 days of the month, and then it fell almost 30% the next 26 days. That was one of the biggest drops of that year, but at the end of the day, from start to finish, it was only recorded as a 13% loss. Do you see what I'm getting at here? Yes, it is a bearish month historically, but taking it at face value of the drop could be deceitful based off of the bigger move. Look at 2020. Overall, it was a very bullish year, a 300% move to the upside from start to finish. But September was still a bad month. In the first 4 days, we crashed 16%, and the rest of the month was spent recovering from that crash. The net loss was 7.5%, but look at the bigger move. From the start of October, Bitcoin spent the next almost 200 days pumping 500%. 2021 sort of follows the same idea. We all know that 21 was the year Bitcoin put in its all-time high. And although September from start to finish was a 7% crash, the fall that month was the higher low that led to the all-time highs. Always take the bigger picture into account. 2022 is no different. Look at the overall bearish trend from the terrible time we had last year. I remember the build-up to the September bearish sentiment, and the market did its best to trap the traders. The first 6 days of the month, Bitcoin stutter stepped down 7% below 20K. And right when everyone went short, thinking it was going to crash down further, it rebounded 23% from top to bottom in the next 6 days, trapping the bears. When the bears got trapped, it rebounded past 20K and past the 50-day EMA. So now the bulls thought that it was going to retest 25K and everyone went long. Naturally, again, the bulls were the ones who got trapped. And from top to bottom, Bitcoin fell 20% back under 20K in the next 6 days. September last year, Bitcoin battled in a big range fighting over the 20K level. But if you're only looking at the month as a whole, start to finish, it only lost 3.1%. My point here is that there is always more to the story than just A to B returns for whatever month. And sure, September is bearish, but it always leads to the bigger move. Even last year, after the fight for 20K in September, Bitcoin put in its local low in the 15,000s 2 months later. So of course, you're thinking, AJ, what's going to happen now? Look at this chart on your screen here. Do you see that yellow line across the middle there? That's around the 25,200 level, and this is the support resistance level that is the deal breaker in my eyes. The bigger picture for 2023 has been bullish overall, but things have been a little scary since the high in July. As of right now, Bitcoin is above that 25K, but if it loses that same level and puts in a lower low, that would structurally break its pattern in a big way, and that could be the precursor for the future bearish action. On the flip side, that same support resistance line we're headed to could act as a big spring that projects us back up to the 30,000s and put in another higher high. What scares me is that when we pumped up at the end of August and immediately got shut down, that rejection counts as a higher low. We got rejected from the 200-day moving average, we got rejected from the 50 line on the RSI, we're looking bearish on the momentum oscillators, and the current price action is dead smack in the middle of a low volume node. There's not another big spike in volume until we get around the 23,000 level. And if we did fall to that 23,000, that would be a break of structure, and I would expect more downside from there. Listen, you guys know me, you know my style. I'm not gonna sit here and tell you it could go up or down. I'm going to tell you that that support resistance line is the deal breaker. And as much as I hate to say it, my guess is that we are going to lose that line and continue down before we turn around for the pre-halving pump. To be fair, I think that the bottom is already in, and whenever we turn around from the dump that's about to happen, that is going to be the higher high that takes us up to the next bull run. Let me know what you think in the comments down below. Am I being too bearish, or are we going to bounce off this support resistance line? Catch me in the price prediction department this Sunday, and that's all I got. Have yourself a great weekend.